Hi, everyone. Mike White here. Welcome to this week's blog post. The only way to title this blog post is that the Fed still rules. It's amazing. Last week, we talked about the economic information that was going to be coming out over this past week. It was largely jobs information and inflation data for May. Neither report was particularly encouraging, but the markets are taking the information in stride and really confirming the belief system that you don't fight the Fed. The Federal Reserve has taken the position that higher inflation is transitory in nature and that it's all because people are not back at work yet fully, and that the supply chain is weak because we don't have everybody back to work, and that is, as people continue to go back to work, that supply chain is going to improve, and that will drive prices back down. And apparently the markets are buying into that because they don't want to fight the Fed. The Fed's continuing to buy treasuries and mortgage-backed securities and continuing to say that this is not something that we need to worry about right now, and that's the case. Now, today really proves the point. Inflation numbers come out, and that year over year inflation was at 5%. Now, that's sort of like the highest number that we've seen since January 1992. And certainly well over the Fed's target of trying to keep inflation at 2 to 2.5%. And the market reaction, to be honest with you, barely moved the needle. To look at the 10-year Treasury went up a couple of basis points, and the 30-year UMBS 2.5% coupon, which is the one that I like to follow, giving us an idea of what's going on in the market. Yeah, the needle moved a little bit, and I'm looking specifically before the announcement. We were at 103.67 on the price, and it fell to 103.58. So the move was lower, but not all that much. But you got to keep in mind, if you follow the charts, and I know many of you do, that 103.58 number is really where our floor of resistance is. And it really could, be meaningful if we push below that. There's a good ways to move before there's any more support. And I think the only thing that we can do is believe that the Fed will continue to buy strongly and support the markets, which it has on a very grand scale. And given yesterday's 10-year Treasury auction was very well received, I think the only thing that we have to do is realize that we're having to hope that the Fed is correct in its assessment, and that the markets are not going to fight the Fed for now, and that keep an eye on things like this afternoon's 30-year Treasury auction to see, how that's received, and understand that people aren't fighting the Fed. The Kool-Aid is still out there and continues to flow until otherwise noted. So my only advice to you is, as I've always said in the past, if you like it, lock it. And if the customer wants to float in this market once they're under contract, that they probably should be advised of what the risks and the rewards are. But you know what? Who am I to say anything? Because in a normal time, the jobs report number and a 5% inflation number would scare the heck out of me, and I would have anticipated the markets taking a nosedive. And for now, barely a bump in the road. So it is what it is. Pay attention to what's happening. As always, questions or comments, Mike at imtcoaching.com. We'll talk to you again next week. Take care.